Hi, and welcome to the Market Alert for Friday, the 17th of March 2023. Just before we get into the Market Alert, just to let you know, there'll be no Market Alert on Monday, as I am away this weekend at a family wedding, and therefore I will be back in my seat on Tuesday morning. I will be looking at the markets. Like I say, you could say it was bad timing, but you never know when the markets are going to fall apart, of which they are at the moment. Well, you wouldn't think so after yesterday. So let's get into this. And yesterday, as I said in the alert yesterday, it's very difficult to predict because you have no idea what's coming next. And yesterday was a perfect example of this. Stocks soar as big banks depot reach around and rescues regionals. Bonds dumped 30 billion bucks, and bond volume is still worse than LTCM, long-term capital management. That's going back to 1998. You need to look that up if you want to know more about it. That was the first thing that was bailed out by Bernanke, if I recall. Yeah, the depot reach around, this is a new phrase. Deposit, obviously, reach around to actually secure those deposits. So, the bank in question was First Republic. Shares crashed yesterday morning, sending the markets lower. That was to begin with. Weighing options, shoring up liquidity. Then we see First Republic shares jump on big bank deposit bailout plan. And then we get the number. Big banks agree to historic 30 billion unsecured deposit injection in First Republic Bank. Well, this is very interesting, isn't it? Because how many more banks are they going to bail out? I think before you get too excited about this, you need to take a look at this and have a reminder of what we looked at the other day, the unrealised losses on investment securities by the big banks, and we are sitting at 620 million. So somehow or another they managed to conjure up between them 30 billion to bail out a regional bank, and this isn't the fourth this week or the last. So it's certainly going to be interesting, but I'd like to know where they're getting the money from, and actually I can tell you it's going to be backstopped by the Federal Reserve and the taxpayer, isn't it? There'll be a deal that's being done behind the scenes, without a doubt. And no, if it is a generous offer from all of the major banks, then it's going to allow the Fed to bail them out if they need bailing out, isn't it? So, quid pro quo deal going on here. That's all it is. Unsound banking, as I'm just saying, why most of the world's banks are headed for collapse. Well, we've seen that, haven't we? Because it's here. It's already available at in this quarterly report. And yesterday as well, Lagarde increasing rates as promised by half a basis point. ECB, Lagarde 3 to 4 against. Deal 3 out of 4 didn't support decision. But it didn't matter. They've increased interest rates. They were damned if they do and damned if they didn't, really, weren't they? If they didn't raise rates, they would have sent a message to the market that they believe that there is contagion, and by increasing rates, they're going to create contagion or add to it. So the European banks will be next. We've had Credit Suisse. There'll be more to follow. It'll be interesting to see when it takes a hold with the UK banks. I did hear murmurs today about something to do with Barclays having something to do with SBV, the UK arm of the Silicon Valley Bank. So we'll find out all in good time. The trouble is it's so big and so complex, and such a web of potential contagion that it's very difficult to actually know where to start with it. So we just have to wait for them to pop up each day. We've had 4 this week so far, and I'm sure there's going to be many more. Economic news, for what it's worth, it's all ignored at the moment because obviously the focus is on the banking sector or the contagion or potential contagion. So all we've got today it isn't 10 a.m, it's going to be 2 p.m, and that's prelim UN consumer sentiment, 66, 67 last time. Like I say, bigger fish to fry than this today. So let's get on and have a look, see what the markets did during yesterday. It was wild, to say the least. And starting off with the Dow, we can see that the market shot up yesterday. Big move to the upside. Not so bright overnight at the moment, but let's have a look at the 30-minute chart just to see more detail there. So at the moment struggling with 38% retracement, from there back to there. 30-minute charts, you can see the move yesterday. The markets were down in the pre-market session. As we look there, we had a range of 428 points from the high to the low, and then once we saw the consortium come in of the main banks, the Dow turned it around and shot up 730 points before the close of trade. Bizarre, absolutely bizarre, but of course, given the chance to move the markets back to the upside, they will do. At the moment, there's yesterday's high. The market's currently trading at the close. I would imagine that there's going to be some sort of reversal today, but not first without attempting to get through the high. I mean, how it took 30 billion in a consortium of banks to save one bank that was tanking the markets. So unless you've got another 30 billion worth today, how can the market move up another 715 points? Well, it can do, of course, because then the Fed will make an announcement, say, tell you what, save the consortiums coming out, we'll backstop everything, we'll cover everything, i.e. the taxpayer. It's a mess, isn't it? It's an absolute mess. In the implied volatility, this was greeted, obviously, with some relief. This dropping from 1981 down to 1746 during yesterday, but it's not over yet, is it? We can see that this is only going to get worse going forward, so we can expect to see the implied volatility increase once more. In the German DAX, again, you can see the market moving up off the 78% retracement. I mentioned this yesterday morning, the 14675, the market traded to it, but overnight the market struggling at 38, and also the 5-bar moving average. In the 30-minute charts, which we can see here, let me just grab this, and you'll see when we started trading yesterday morning, we ended up down 329. It was a great trade to the downside. Caught most of it, but I didn't quite. I ended up out at the low. But the market then, of course, as we saw later on, reversing off that low, and then, of course, following the Dow to the upside. And there we saw, let's have a look to the close of the Dow. We saw a 404 swing back to the upside. Absolutely massive. Huge volatility. Overnight, the market in the 30-minute chart, you can see the high and the close. Struggling with this at the moment. We've got a crossover in the 30-minute chart, and the 200 MA also giving the market a bit of grief at the moment. It's attempted to move up 50 points overnight, but at the moment heading down a bit there. It'll need to take out the 50, the DP, and the S1, and then head down to there if they get a straight reversal. If not, we will go through the high, and I wouldn't be surprised if they try and bring the market up to begin with. If it goes down from the start, then I should expect that it will continue to do that. Yesterday morning, we've got the futures market moving up. Cash market opened, and we sold off, and that was the way it was all the way down to it went down to the S2. Just down towards the S1, just below the low, and then the market started its move back to the upside, and that's how it continued for the remainder of the day. Overnight, we saw the market gap down. The gap has been filled, as can be seen here, with prices coming back to the close, and at the moment showing a bit of weakness there, despite we've got a bit of buying coming in, and also we're oversold at the moment. So an attempt to back to the high wouldn't surprise me at 7 a.m. when the futures market opens. And trades for the week, 6.43 on the profit factor, 2,094, and we have a win-loss ratio there of 63 to 37 there. So yeah, a good week so far, but yesterday afternoon was just wild. There was no stopping that up move. So like I say, we're going to have to see what happens during today. But the volatility was fine yesterday morning, but yesterday afternoon it was just insane, particularly when the announcement came out with that 30 billion funding by the other banks. It really was slightly wild, to say the least. In the S&P, the market up yesterday, 78% retracement from down back up. through the 200 MA again, but not quite above the 4,000 that it wants to be above. That's the magic number for the S&P. We've got the 20 bar moving average there giving the market a bit of grief, and that's 78. So any move to the downside will have to take account of all of these fibs as well on the downside. 30 minutes, you can see the move to the upside. It was fairly a reasonable move down in the S&P, but what a move back to the upside. Again, this is traded close to yesterday's high. It will need to close above in order to move higher. If not, it will test the 50, the DP, the 200, the S1 and the BRN there, and then the low if we see the market move back to the downside. Again, I don't know which direction it's going to go in because we have no idea what's going to be announced. You just have to take a view and manage the trade as it unfolds. FTSE 100, you can see there we got some buying back in the market yesterday, but no follow through really on the overnight. There is a bit of a mess yesterday, but we had a shakeout, and then we came down to 7,350 here, and then the market was brought back to 7,450, up 100 points overnight. The market sideways to lower, not back through the high, similar to the S&P there. And in the GBP JPY, you can see that the market retraced yesterday to 89%. Buying came in, market moved higher up to the 50 bar moving average. And on the upside, if we just draw these in, you'll see that we came back to 62%, the golden ratio there, and the 5 bar moving average along with that 50, where there's a bit of resistance there at the moment. But in the 30-minute charts, we had a move down of, let's just have a look at this, 100, 250 pips, followed by a move back to the upside of some 100, 200, 350 pips. Massive move there. Market blew out at the 50 bar moving average, sorry, the 200 moving average, did a double top and then has moved lower, and the 200 MA is still giving this market some grief. We got the high above this, but it would need to drive through in order to get through that with some serious volume. Meanwhile, in the pound, this also moving higher off a 50% retracement from the low to high pullback, and at the moment is trading at 78% on the upside. Needs to take this out to get through the 89 and the red or the pink line there to move higher. In the 30-minute, you can see the market struggled with the 200 MA. Market became oversold. We've got a crossover, got the BRN, got the volume, and then the market moving to the upside there, and then continuing overnight as the dollar has moved lower through the high, and also just sitting there at the R1. In the US dollar, this down on the overnight, which you can see there, we've got a bit of a retracement going on at the moment. Looks around about 50% retracement, so a bit of weakness in the US dollar. I think maybe the reality is kicking in now, that it's not all the be all and end all. And you can see there in the 30-minute we've broken the 200 MA as well for the dollar index. And finally, a surprise in the metals, and again, 30 billion to bail out the banks. The metals are not buying it. They're saying there's more coming down the line, and neither is the US dollar. But silver up on the overnight, down yesterday to the 5 bar moving average with considerable amount of silver. We've still got the momentum to the upside, but we need to take out these average fibs that we've got drawn on the upside there in order to move higher there. So we've got all of these resistance areas plus the high of this bar, and then the resistance to the left, which is coming off here, which the high of this is 2260, and I said yesterday the 2250 is the issue. We've got to get through. Not 2250, 2350. We've got to get through the 20. Oh, it is 22. Yeah, 2250. I thought it was. That's what we discussed yesterday, wasn't it? It's there, just above. There it is. Yeah. So 2250 is where it needs to get through to that 2262 in the daily chart. But overnight, the markets moved up quite nicely. Yesterday, they managed to do what they usually do and moved it lower. Became oversold, crossed over, a bit of volume there as well, depreciating volume as it, or declining volume, showing the selling had disappeared. And then the markets managed to move up. Gold pounding ahead there, needs to get through the 89 and the high over here as well. This high, let me just draw it on so we've got it for future reference. Save me looking it up. We're 1959, heading back towards that 2000 per ounce level. I need to get through the 89 with the 47 level there. But again, overnight moving up nicely, not buying the 30 billion buyout. Yesterday they weren't either, but with the carnage in the market, there was a bit of a jump into the dollar, sending the metals down, but they've soon recovered. Worth more than the dollar, that's why. Worth more than the dollar. And finally, the gold-silver ratio moving back down as silver has made a decent move overnight, accelerated more than gold, but it's just ridiculous to be at 88. It should be down around 15 and below, but it isn't. It is what it is. So yeah, well, there you go. Another day of carnage, and you better get used to it because it's not over by a long shot. This is only just the beginning, isn't it? It's funny how Biden on Sunday night said there's no problem in the banking system, it's not contagious, and it's not systemic. And yet, by Thursday, 4 or 5 banks have been bailed out, and they're the only ones we know about. So I don't know how many more there are. There are thousands of banks, of course, globally. So, and I noticed one in India yesterday had been bailed out. So yeah, it's just the start, isn't it? Just the start. It's going to be carnage going forward. You might get the 30 billion bailout days where they move the markets back 700 in the Dow and 400 points in the DAX, but you know, let's face it, that's just a bit of a gesture. It's not going to solve it. Okay, that's it for this one. Have a great weekend. I'll see you on Tuesday. And as ever, thanks for watching. See you.